7, 2020. It's Friday and it's time to rock and roll and make a bunch of money in trading weekly options, guys. Is everyone was giving up on the crash yesterday? They were at the zero on their psychological clock. They sure didn't see this potential 550-point drop that's going to materialize today. So here comes the beginning of the crash. Now, important to understand, this is just the iceberg. This is just the beginning. I'm going to give you some shocking data right here, guys, that should move you from a 0 all the way to a 10 in just a matter of a few minutes of this video. And I'm trying to keep it brief, so I'm not going to give you a ton of details, but focus on the key points and you will do incredibly well trading today. And importantly, also Monday, Tuesday, and Wednesday next week. So job report traded in the opposite of the initial reaction. So that's what you want to do when the job numbers come out. General rule of thumb, that is something we've been practicing the 13 markets move formula for a very long time, guys. You want to trade in the opposite of the initial reaction. I'm going to show you exactly how this looks on the chart. Short tech stocks today, guys. Semiconductors, LRCX, AVGO, short the hell out of these things today. Plus, all the trades that we have been discussing throughout last few videos, guys, they remain to be awesome, solid trades. At some point, the options expire today. We will be taking a bunch of profits, guys, so congrats on taking action, taking some of these trades. Now, job report today, guys, it's a real issue with fake numbers. It actually points to a severe problem with the economy. What they're doing, I think a blind man can actually catch this insane transparency with the... Even a blind man could see right through these numbers. Guys, the numbers are being adjusted by a crazy amount. The December numbers are being adjusted by half. The estimates were at 317 now. They're coming in at 147. Well, guess where these numbers are being inserted into? They're being inserted into today's job report on February the 7th for the number of January. If they didn't shift these numbers from December, guess what? Today's job report would have only showed about 70,000 jobs. And with that said, okay, there's two conclusions. Number one, the Fed is losing complete control of this economy. Fake printing money stuff does not show the same impact on the economy as it had in the prior instances over the last decade. So that is why, while everybody still says, oh, they're cutting rates, they're doing this, and this is why you should just keep buying stock, that's why it's going to become an old myth. Now, everybody still wants to believe in this, but you're going to see how this shift in this attitude and behavior is going to change rather rapidly over the course of the next few days as people realize, hold on, this stuff does not work anymore. This is not a reason to stay bullish the market. We're going for some severe drops in the market, guys, over the next 90 days, and it's going to happen. So position yourself properly, and you're going to do incredibly well. So I'm actually super excited for everybody. So let's take a look at some of the things to pay attention to. The futures initial reaction of the job report. This was a snapshot at 8:31 a.m., guys. Anytime you see this after a job report, okay, again, don't try to figure out the numbers as I'm trying to break them down here for you. Just focus for the purpose of day trading. That's all you need to know. I've just given you the bigger outlook and how these numbers and the way they shifted them is actually going to impact the markets in the next 90 days. But understand that from the purpose of a day trade, all you want to do is you want to short this bounce because the initial reaction is not the true reaction. So actually, that's why you want to trade the market on the put side when you see this bounce on the job numbers, because it's likely to be reversed and expect a move lower. So today, we're trading today as a move 3, shorted intraday bounces. So this is 8:30. We get a spike in the job report. Expect the reversal. Before the market opens, it's going to open with a gap down, as pointed in yesterday's video. After this, expect a move lower, followed by a move higher, 10:15, official move lower, and we're going to keep going lower through the rest of the day. At 3:15, pay very important attention to this time frame because it's actually going to tell you how we're going to trade Monday. So typically expect like a healthy bounce. If we're down like 50, 60, 70 points on S&P by the end of the day, expect like a healthy bounce of 20 points. If that bounce does not happen, guys, and today could be a day where we're actually not going to get this last leg higher going into the close, that tells you they are going to be selling like crazy Monday, and you want to buy puts that cover the Monday, which is going to be February the 10th. So February the 10th could be a super big drop, like 800,000 point drop, guys. All right. Yesterday we've talked how the price of 968 in Tesla was coincided, would be the equivalent of this 3350 that was set pre-market yesterday. And so far it is playing out. So expect the market to continuously do this. As you see, after Tesla hits the top, it doesn't just drop for one day. It drops for two. Today would be third day down for Tesla. So China unable to fulfill its contractual obligations on copper purchases. Guys, it actually never done that, ever. So this is the first time. Now, we've talked about the copper chart in our video we posted a few days ago, which is titled 13 Bear Signs. So you haven't reviewed that, make sure you go and study all the 13 instances. But the most important part you should know in this chart, all these bearish reversal candles, just like I pointed out on the chart with CMG, Chipotle, the earnings report was good, but the stock sold off, right? So this is the same type of circumstance. You want to short this on the bounce. You see a ton of these reversal candles. Copper prices are going lower. Now, here's the scariest part. Copper has not traded below 247 in many, many years. And 247, if that's broken, which would be this red dot right here, this 247 level, right now we're at 259, this 247 level could be broken over the course of the next 2 days. If that takes place, the whole world is going to notice this, guys. Now, China represents half of the global demand for copper. And the fact that they basically said, hey, we can't buy copper right now. We can't do it, okay? That's going to drop the prices. This could be one of the reasons the prices could go below 247. If that takes place, guys, look at how this chart looks. The pre-existing condition on the chart, you had a bullish crossover, which is now going to be reversed into a bearish crossover. When copper crosses, one thing you should know, when copper made this crossover last time, it was right before the crash in December of 2018. So we're headed into the same similar setup right here. What's going to happen as well, we remember some of the heaviest sectors that were hit in December of 2018 were the tech stocks, the semiconductor stocks. So this is a leading indicator. These stocks, these sectors are going to get hurt very, very much. So while all the technology stocks are trading at all-time highs right now, all the semiconductor stocks are trading at all-time highs, this is an awesome opportunity to short the hell out of those sectors and put some really nice trades together. So with that said, expect a reversal in oil, expect a reversal in copper, expect a reversal in a lot of commodities. Okay, that is not a good sign, guys. The only thing that is going higher is gold, all right? And that is the worst circumstance from the standpoint of how these type of conditions impact the stock market. So you've had situations in the past where copper is dropping, but so is gold. Right now you have a situation where gold is highly bullish, and in combination where everything else is highly bearish, like oil and copper and other things, okay, that is trouble for the stock market, okay? So watch this chart, pay attention to the setup here, and understand that this bounce, it's not going to continue. So when people see this on the chart, oftentimes they're like, well, it's going to keep going higher. Well, the question of the day is, what if it doesn't keep going higher? That actually is going to tell you, okay, and there's 99.99% probability it's not going to keep moving higher from here. So your basic trade here is short tech, short semiconductors, and you want to short them today while they're still closer to the top. So on the psychological trading clock, as the market's going to drop today, people that were yesterday at the zero and did not believe in the crash at all, they're going to shift today after watching the market drop another 3, 4, 5, 600 points lower. They're going to be at a 3. Now, we've been putting all these trades together throughout the week, taking bearish side positions. So at this point, when the market is going to drop, we can already collect some gains, while these guys are still just going to be getting into these trades, guys. So very important to understand that even though the market didn't do a whole lot yesterday, and it did finish in positive, it was a move 5 overall, guys. We're heading for a drop-off, and not just a one-day drop-off, but a multi-day drop-off. As pointed out by the historic analog, yeah, it was officially off by like a day and a half, but this is what we're looking to do right now in pretty much all the major indices. So we could be going for an easy 10% correction between now and next 10 days in the markets. Target for S&P still remains to be 3,025, historic analog. We're about to do this right here on the chart, guys. The entry levels are the same. As pointed out in yesterday's video, you want to short this level 33.37, 33.31. So if we get this opportunity to open, this would be an ideal point to come in and short the hell out of this market. So top sectors again to short: tech, semiconductors, retail, China, copper. All the trades that we've been talking in the last couple of videos, they're still very much valid. Twilio puts, Amazon puts, BKNG puts, CMG puts, RCL puts. All of these are, by the way, for those of you guys that took the RCL trade, this trade is going to be up close to 800% this morning. The stock is actually trading pre-market at about 113 level. So we were pulling the trigger when it was trading at 122, 124 area. So the depending on what strike you got, 120 or the 115 puts, they're all going to make a bunch of money today. So congratulations, guys. Yesterday, February 6th, was Thursday, and we had an easy move 5. The market was just not going lower or higher. It was kind of trending sideways in expectation of the job data. It is going to move today because that job data is released, and it's shocking. 2-day sequence is a 7.5, guys. 7.5 looks like this in the chart. The one interesting thing about this sequence is it created a top intraday before the market actually opened yesterday, so it touched this 33.57. It resembles the same thing it did around the 33.37 level before we got that 600 point drop like last. So there's a high probability that this type of setup actually is going to lead to another 500-600 point drop today. 5-day sequence 311, 775. Interesting to point out that VIX refusing to surrender these key levels of 15. Therefore, we're expecting VIX to spike, and today we're targeting for a move 3 formation. So it's critical for VIX to actually close above 16 today. We don't want to get another day like a move 5 type setup. So we think that VIX is likely to break that 16 within the first hour of the trading session. So officially yesterday was downtrending, but it's about to reverse and make a shift higher. This is how it looks on the chart. So pre-market at the time I'm reporting this, 1516 is the numerical value in the VIX, so it's likely to do this when the market is going to open. So keep in mind that we are in a trading tunnel on the VIX all the way to about 19 here. When we get to 19, you could start taking some profits, but at this point we're going to actually slash right for this 1920 level and go higher on the VIX by Monday, trading substantially high above 20. Now target your entries for puts on intraday bounces, guys. Buy puts, today's expiration and next week expiration, position for a big drop. Monday trade like a rockstar. I'll catch you on the next trade soon.